Hey guys, I hope you're having a wonderful day and welcome back to the channel. It's good to see you again. Today I'm going to be telling you everything I have learned and picked up on after my first year of investing into the stock market. Make sure to watch to the end of the video because I do answer some questions which I bet you've been asking yourself and cover some very interesting points. With all that being said and the like button being smashed, let's get into it. I want to start off by saying investing in the stock market is far from a smooth ride, and only by experience will you truly understand that. Over time, stocks generally appreciate in value because companies get bigger, they make more money and they expand. Most people perceive investing to be a gamble and a quick cash grab, but as soon as you understand its core purpose of building wealth over time, you'll be doing it for the rest of your life. So, let's rewind all the way back to the 9th of April 2020. This was the day I deposited my first £10 onto the app, Trading212, which is the broker I use. Prior to depositing this £10, I was practicing with the virtual £50,000 which they give you on the app. This was very beneficial and I highly recommend doing it to anybody which is just starting investing because you get a very good feel for how the app works and how you can buy and sell stocks. Although it's not real money and the shares you buy into companies have no impact on the price at all of the transactions are still the exact same as if you were using real money. I played about with this for a couple of days before I decided to put my own money in because at that point I then felt comfortable. And after that £10 was deposited onto the app, 1 week later I then bought my first stocks. I put £3.30 into Disney and £5.76 into Tesla. You know, as they say, start as you mean to go on. If you don't follow my Instagram already, make sure you do so, but I recently posted on one of my stories that I've started up my ISA account. In this account, I've made a pie of 6 massive companies which I'm going to be holding for the next 5 years at least, 2 of which are Disney and Tesla. I won't give you the reasons of why I've bought into them as of yet because I'm going to do a video about it, so stay tuned for that. Anyway, when I first started investing, I was very emotionally detached to my investments. I almost treated it like a game because when it was going up and going down I'd get really excited or really sad, but I won't get sad because I knew it'd only be like £3 if I lost everything. But I'm sure everybody gets that feeling when they first start buying into the stock market. You don't know what you're getting yourself into, which is why I'm making videos. Gradually over time, I started to deposit more and more money onto my investing app. This became a bit of a snowball effect in terms of the amount of money I was putting in. It started off with £10, another £10, £50, I remember that was quite a big step, £100, and then it got big. I think one day I put in 3 back-to-back £500 deposits because I had the money in my bank account. And when I soon realised what's the point in having my money in my bank account, it all went into my investing account. Not everything because you need a safety net just in case of an emergency, so I think I kept roughly £200 or £300 in my bank account, but everything else went into stocks. By all means, this was not straight away. It took a couple of months to deposit all of this money as it would be stupid to put all of it in when you don't know a lot. And as I was putting more and more money into my investing account, I had to take it a lot more seriously because if I didn't play my cards right and I was buying into very stupid stocks, I could lose everything. That is why I really took my time to do some research into the stocks and make sure I understood what I was doing on my investing account. The number way I did this was by watching YouTube videos. The main 3 people I watched was Graham Stephan, Andre Jick and Meet Kevin, the tank of uploading. I'm not exaggerating when I say this, I watched hours of their content every day because I was so intrigued. Not only was I trying to learn in order to understand what I was putting myself into, I really liked learning a new subject, just new information. They always say time is money, and that time I spent watching all of those YouTube videos was priceless. I can safely say none of it was wasted at all, as I can still retain a lot of the information from those videos today. Watching other people's content and hearing other people's opinions, especially on stocks you've bought in yourself, is very reassuring in the stock market. Initially, some people tend to doubt their investments if it goes down straight away as soon as you've bought into them. But if you've done your research and you are confident that the company is going to do well in a year, 2 years, 3 years time, you will have no issue if it goes down in a couple of months after you've bought into it. That is why I always encourage buying for the long term, as you don't want to be stressing over a couple of days of red. If anything, you should see it as a good thing, as it's an opportunity to buy more. That is another very good point which I've just thought of. If you do plan on day trading and you go against all of the advice of sticking to long-term investing, do it with stocks that have good long-term potential. If you do it with smaller businesses that are less known and very volatile, this could be very risky. If you bought into them and they dip straight away and you don't have confidence that they're going to go up in the next year or two because you haven't done your own research, that's on you. Whereas, say for example, if you decided to day trade Apple, Coke, Facebook or Disney and they went down, you could at least hold them for half a year and you would make your money back and you wouldn't lose anything. That's in the very unlikely scenario which they don't go up in 6 months. You get what I'm saying though. You could easily turn a short-term day trade into a long-term hold. Which, to be honest, isn't really a bad idea, because if you do want to hold them for the long term but they go up in the short term, it's kind of a win-win anyway. If they go down, you hold. If they go up, you sell. Or if you really want to, you could just keep on holding if they go up. It's up to you. That transitions quite well into another point which I have, and that is the S&P is the best stock to ever exist. Despite its low volatility, the S&P 500 outperforms half of the stocks which you've got in your portfolio at the moment. I can guarantee. Okay, I can't guarantee it, but what I'm saying is the S&P 500 is such a safe stock to buy into for the long term. Even for the short term, like a couple of months, it will do better than other stocks which you own. Especially at the moment, ever since that GameStop scenario happened, the market has been quite a bumpy ride. Whereas during that rough patch, the S&P has just kept going. You've got to remember, it is an index fund for the top 500 performing companies in the world. So whatever the best performing 500 companies are doing, that is what the S&P is representing. Warren Buffett loves the S&P 500 and he has built his wealth through it. He knew and still knows the long-term game of investing, which is always better than trying to get a little quick bit of money for the short term. That's another thing. Any money you put into your investing account, expect to leave there for at least 6 months without taking it back out. Perceive it as if you're locking it away in a safe and you're not allowed to touch it. This is the best way for you to become sedimented in your investments and promote you holding them for longer. Not only this, there is a transaction fee when you deposit money, and that only came in recently on Trading 212. It's not a lot, I'm pretty sure it's 0.2%, but when you put in a couple £1,000, it can come up to around £4, £5. Anyway guys, I hope you enjoyed watching this video on me speaking about what I've learned from my investing over the past year. Some of you that may have started from around the same time as me last year may be experiencing the same feelings. Hopefully you were able to take away something from this video, as the more information you accumulate, the better off you will be. Anyway, enough of the waffling. Make sure you subscribed if you haven't already, like the video with post notifications on. Stay safe and go make some money. I'll see you in the next one.